Hi students, today we are discussing an illustration problem from dissolution of a partnership firm. Here is a simple problem before you. A and B shared profits in the ratio of 3:2. Their balance sheet as on 31st March 2020 is given here. And on the above date, the partners decided to dissolve the firm and assets realized as given here. Assets realized in the sense it is all these assets are sold in the amounts given here. Stock is sold at rupees 45,000. Machinery sold 20% less than the book value. Then debtors realized, that means amount collected from debtors rupees 35,000. Land and building sold at rupees 30,000 more than the book value. That means land and building we had here 1,20,000. Now it is sold for 1,50,000. Machinery sold less 20% less than the book value means machinery sold for 32,000. And creditors agreed to accept 5% less. That means we need to pay only 19,000 rupees to creditors. And the expenses related to realization of asset is calculated as 1,200 rupees. And what we have to do? We have to prepare journal entries and give necessary accounts. So, as this is the first problem, we can first see how the journal entries will be done in realization account first, and after that the corresponding entries, how it will be taken in the journal, we will see. Normally, we have to prepare the journal first, but here we are preparing ledger account, and from that ledger account we will come back to journal. Okay. Here is realization account, and in realization account its format is here. We have discussed the preparation of realization account and all the adjustments related to dissolution of a partnership firm in the previous video. You can go through that, and I will add that link in this video also. Okay, let us start. In realization account, as we have told in the last video, we have to transfer all the assets except cash and fictitious assets to the debit side of the realization account, and in the credit side all the liabilities, outside liabilities and provisions are to be transferred. Okay, so first let us start all the assets except cash and fictitious assets. All the assets except cash and fictitious asset means all the assets which are to be realized will be transferred here. So first let us transfer debtors. Debtors we have in inner column 40,000 rupees. We have to take the value given in the inner column only, because that is the original value. And we made a provision of 1,800. That cannot be adjusted here. We will transfer the provision to the credit side along with the liabilities. And there ends the treatment of provision for doubtful debts. We have to transfer that provision for doubtful debts to the credit side. That's all. Now let us write the gross amount of debtors here, 40,000. Then stock. Stock we have 54,800. That also transferred. Then comes machinery. Machinery we have 40,000 here. That 40,000 is transferred. Then last asset, land and building, we know that it is 1,20,000. That also is transferred. This is clear. Now let us see the journal entries of this transfer of assets to realization account. So here is the journal. Journal is ready. First of all, we can write the date 2020 March 31st. The entry is realization account. In the realization account debit side we have entered all the assets. So we can write realization account debtor to assets one by one. To debtors. Debtors how much it was? 40,000. Then to stock. Stock was 54,800. Then machinery. Machinery we had 40,000. And the land and building land and building 1,20,000. Okay, so the total amount comes as 2,54,800, and the narration being the assets transferred to realization account at their book value. Okay, now let us see the transfer of liabilities in the realization account. Liabilities, we can see we have liability only one item, creditors 20,000. So all the outside liability is over. Now we have a provision for doubtful debts. Provision for doubtful debts also transferred, that is 1,800. So what will be the journal entry for this? Creditors debtor, provision for doubtful debts debtor to realization account. That we can see here in the journal. The date we have to give it to. Then creditors debtor how much? 20,000. Then provision for doubtful debts 1,800. Then we narration can be written before that. Its total to realization how much? 21,800. So the narration being creditors and provision for doubtful debts transferred in its book figures. Okay. Then let us come back to realization account again. Now what is the next step? We have to sell all these assets. So the journal entry is by cash or bank. Here we can write bank because in the balance sheet also there is no entry regarding cash. That means cash in hand is not there. So we can proceed with the bank account. By bank, the assets we have to sell, the realized value of all the assets are to be written. We can write in inner column all the assets. Stock we have sold for 45,000. Machinery sold for 32,000. Then debtors realized for 35,000 and land and building 30,000 excess. That means 1,50,000. So the total amount of money collected from the realization of asset is 2,62,000. Okay. Now let us write the journal entry for that. Here date. So journal entry was bank debtor to realization. So bank debtor how much? 2,62,000 to realization. Since we have written the realized value of individual items in the realization account, it is not necessary to write in bracket all the assets. We can just show that being the amount realized from sale of assets. That's enough. Okay. Then we can again see in the realization account. Now assets are realized. Now we can write the entry for payment of creditors. So we will write here creditors are there in the credit side. Now we have to pay it off. So in the debit side we have to write by bank. For understanding purpose you can write in bracket creditors paid. How much? Yes, 19,000 rupees. Okay, 5% less. Then one more adjustment was there. Expense of realization of assets amounted to rupees 1,200. So if there is realization expense, we will write realization account debtor to bank again. So in bracket expenses paid 1,200 rupees. Okay. Is it clear to all? Yes. So all the entries over. So we can write the journal entry for this one. In journal we can give the date, then realization account debtor to creditors. We can write realization account debtor Okay, 19,000 to credit to bank, that is realization account debtor to bank for the payment of creditors, 19,000 rupees, being creditors paid at a discount of 5%. Then like that, realization expense also paid. Shall write the journal entry for that also. Realization account debtor 1,200 to bank 1,200. That is payment of realization expense. Okay. So these are the entries written there. Now can go back to realization again. So all the journal entries, all the adjustments in realization in this question is over. So let us total. We have credit side more. Credit side can be total 2,83,800. That will be taken to the debit side and we'll find out the balance. Balance will be shown here. And what can be written against the balance? Yes, this is realization profit and that will be shared among the partners in their profit sharing ratio. So to capital accounts of A and B. A and B in the ratio of 3:2. So if they share, we will get 5,280 and 3,520. Okay. Now we have to write the journal entry for sharing of profit on realization. So the journal entry is realization account debtor to A's capital to B's capital. So realization account debtor. Okay, before that date can be mentioned 2020 March 31st. Realization debtor 8,800. Then to A's capital. Then to B's capital. How they shared? In 3:2 ratio. Okay, right? Then we can write the narration being profit on realization transferred to the capital account or shared among the partners. Now the realization account is completed. Then let us prepare the capital account. Capital account also is ready. Partners capital account, that is A's capital account and B's capital. We know that how to prepare the capital account in the last 2-3 chapters. We are from the beginning of partnership itself we have studied about the preparation of capital account. So you are very well understand how to prepare the capital account and you can do it. So let us see by balance brought down, where the balance is given. Yes, it is there in the balance sheet. 1,50,000 for A and for B how much it was? 90,000 was there for B. Okay, 90,000. Is there for B. Then realization profit was there, that is to be transferred. Realization profit is transferred 5,280 and here 3,520. Okay. Then no other adjustment here. So we can total the capital account of A and B. 1,55,280 and 93,520. That will be transferred to the debit side and will be writing the balance. We can write the balance of both. So what we will do with this? What we will do? Yes, this is here the firm is going to end. Firm is going to wind it up. So whatever balance is there after adjusting the capital account, it can be given back after adjusting all the liabilities. Here we have adjusted and paid off all the liabilities, and after that whatever is left can be taken back by the partners. So to bank, that means it is finally settled or paid to partners. Okay, then we can write the journal entry for that also. So here date, the journal entry there it was A's capital account debtor, B's capital account debtor to cash or bank. So A's capital debtor, then B's capital debtor to bank. So their individual capital account balance is given. Total amount 2,48,800. So final payment is made to the partners. Then we have to prepare the cash account. Cash account is the last account to be prepared in dissolution of partnership firm. Okay, here balance sheet will not be prepared because hereafter firm is not going to continue. Here it is winding up. So at last the cash account is to be tallied. Means all the receipts should be equal to the payments. All whatever receipts are there should be paid off. So we can start with opening balance. We know that in the balance sheet cash at bank was there. We have not taken that balance anywhere in realization account or capital account. So that is directly should be transferred to the bank account. Cash account was not, that amount of bank was not taken in the realization account just because it need not be encashed. It is already cashed, so need not realize. That's why it is not taken there. It has to be transferred in the bank account only. Okay, opening balance. Then all the entries in realization accounts are to be posted here. All the entries means all the cash entries. See here, credit side bank is there. That means bank account debtor to realization. So in bank account we have to write to realization. To realization we have written 2,62,000. That means realized value of assets. Like that, here realization account debtor to bank is there. Two entries are there. Realization account debtor to bank for creditors paid and expense paid. We can write both the entries here. Realization account debtor to cash. That means in cash account by realization account. 19,000 for creditors and 1,200 for expenses. Right? So entries, bank entries from the realization account is over. Now where the bank entry is left? Yes, in partners capital account bank entry is there. Partners capital account debtor to bank. So in bank account we have to write by A's capital. By A's capital amount 1,55,280. Like by B's capital 93,520. Okay, so let us see total is equal or not. Yes, both the sides total is equal. Okay, so in this way you have to get the answer. I hope all of you understood this. Okay, you can refer the similar type of questions from your reference book and try to solve it. And this question also you can try once in your notebook. That's all for now. Thank you.